Watch out, everyone. 75% of the stock market companies are at risk of collapse. Let's have a look. Hello everyone, Florian here and welcome to another episode of Heiser Says. We're going to look at what I consider a little bit of media fear, so grab your stein of coffee and I will just turn on the flames. There we go. Look at that. I'm doing it now as a YouTuber. I can't find my alarm. And let's check this article out here, guys. Yeah, well, okay. I can't have them both on, guys. Sorry, I'm going to have to turn off the flames. I know I'm going to have to turn them off, even though you can't see me with them, which some people might consider an improvement. So, a warning has been issued. Who's issued this warning? Who's issued this warning? You know, that 75% of ASX-listed companies are at risk of collapse. Oh, no. I mean, there's a lot of rubbish companies out there. Companies go boom and bust. Companies succeed and fail. This is normal. You've got how many? I can't be bothered looking into it, guys. But how many, penny stock miners are set up for just an exploration project, or a listed company just for a particular project, event, or opportunity that doesn't manifest to something, and people take a punt and invest in it. That's normal. But no, this is a nightmare scenario, everyone. Let me have a shot of coffee before we get into this. And guys, I took 2 days off because I had a huge amount of deadlines all hit at once. And I've been shifting the program I've been using for my visualizations from Lumion to Unreal Engine. So that took me a little bit longer to get it across the line. But I've learned a whole lot of new skills. It's awesome if you haven't used it. So let's check this one out. Australian investors are facing a nightmare scenario as more than 75% of all listed stocks titter on the brink of collapse. Bum, bum, bum. Experts are sounding the... What experts? What experts? We'll see. Maybe the expert will be mentioned here. Experts are sounding the alarm over the large number of financially weak companies listed on the Australian Stock Exchange, as multiple have gone bust in the past year and more failures are expected to come. Yeah, businesses go bust all the time. That's just a part of reality, everyone. Now, here's the thing. I'm hoping that by looking at a lot of this media and kind of like exposure therapy, this fear that's out there, it will hopefully immunize us to an extent from making irrational decisions based on the media fear. That's my hope. That's what I'm hoping. I guess it just comes with age and experience. You can see through a lot of the bullshit. That's why the young people fall for a lot of crap, honestly. That's the reality of it. It's why the 20-year-olds are falling for all this rubbish. They're afraid the world's going to come to an end. They'll jump on the bandwagon for the next big government initiative to save the world. And those of us that are a little bit older, a bit grumpier, we're kind of a bit jaded because we've seen it. We've seen all this shit before. Nothing's new, guys. So that's what I'm hoping looking at these things will provide us, one of the benefits. And then you've got people who just, they love the eco-doom fear. I mean, you can really get sucked into that social media bubble. A new report released by Financial Market. Okay, so they're a market firm. They want to get attention. Stock Doctor, I've never heard of them, on Thursday, found that a whopping 70% of ASX-listed companies are at serious risk of failure. Let me know if you've heard of these guys, everyone. If they're anything to be... if we should worry about them. The sobering result from the Australian Securities Exchange 2023 Australian Investor Study concluded that 77.8% of all companies open to public shareholders meet the criteria of to be considered unhealthy. That means more than 77.8% of all companies open to public shareholders. But how many people are actually invested in them? What are we talking? 50%? 20%? 5%? How much of this 77.5% is garbage that you're not even going to know what they're talking about? don't worry, guys. I don't think your Woolies, your Coles, your Combank shares, or even your Telstra shares are going to be in any trouble. At least we'll see. Maybe, I don't know. What about Qantas, hey? Don't worry. It's the government's job to take care of them now. What would you rather? Qantas having a bit of competition. I know I'm going off topic, but I always do. Qantas having a bit of competition, or them being protected. Oh, well, this is a generation needs to learn what it's like to have Labor in charge, guys. They got to experience it. Not that there's much difference with the coalition these days. Investors are lured into them. Why? You could be walking into a nightmare scenario. Yeah, that's called a situation. That's called investing. You've got companies that go up or down. It depends on what you're deciding. If you want to invest, but you want to just take less risk, you find an EFT that has a large cross section of exposure, or you hire someone to do that for you on your behalf. I mean, people are already investing all the time in their super funds. They've got no choice. They're the sort of stock that a lot of mum and dad investors and self-managed super funds can get lured into. It can be absolutely disastrous. Really? Well, we'll see. It comes as 20 ASX-listed companies have gone under in the past year. That doesn't seem that many, to be honest. A massive jump from the previous like period where only 8 had to call in external administrators. So that's nothing, everyone. That's not very many. The most recent corporate failure was Halo Food Co., which collapsed as recently as last Friday, despite revenue of 51 million. Revenue doesn't matter. This is the thing in the media. You'll have people will look at the revenue and go, look at these rich companies. And I mean, come on. It's not like they keep it all. They have to spend it all. The revenue doesn't mean anything. There's one YouTuber I watch. I can't remember his name. He's an American guy, and he puts, he's been building his portfolio up, and he's got 500,000 now invested, and he just analyzes it all, and he's built up a whole channel on that. And it's encouraging to see this guy build up a portfolio, and he just different analysis and looks at cash flow, and revenue isn't everything. You need to actually make a profit. Mr. Lincoln has also pinpointed several companies that appear in financial strife, including some big names, some of which are on the ASX 300. There's an ASX 300? I thought there was only a 200. There you go. I bet you they're not going to tell us. Oh, maybe they are. Some of the big names that have gone under in the past 12 months include Australian fintech and buy now, pay later firm OpenPay. I mean, yeah, come on. Which shocked Australia and the rest of the world with news of its collapse. Really? That whole sector has been complete bullshit. Maybe we're not the rest of the world, guys. There was also Hills Limited, which originally manufactured the Hills Hoist clothesline before selling the brand in 2017, and also Happy Valley Nutrition, an infant formula manufacturer. Okay, I mean, I've heard of the Hills Hoist. I haven't heard of Hills, and they've sold their one recognizable thing in 2017, Happy Valley Nutrition. Okay. There are also more than a dozen smaller outfits that mostly passed under the radar. Yeah, that's it. Mr. Lincoln said all industries are represented, but the failure rate was particularly concentrated in startups and tech companies. Well, yeah, then you're going to invest in those. Most of those are either startup or newish IPOs. They're living off the capital of their raising, he said, or that they've raised. Well, the last IPO I bought into was AussieBroadband, and I'm just sitting on it purely because, well, I like their service and I've used their products. They're listing for the wrong reasons as an exit strategy. Construction, retail, hospitality, and manufacturing are also industries under a lot of stress due to current economic conditions. That is why it is crucial, he said, for investors to do their due diligence so they don't end up losing everything. You're not going to lose everything. Yeah, I mean, you're going to lose everything if you make stupid decisions, like go all in. Go all in one company. Look at crypto. How many people go in some shitcoin, put all their money in there, and then boom, it disappears. You can see all the horror stories there. I mean, what I honestly think we should do for financial education, give everyone $1,000 and they can invest it however they want. And you have a lot of people will do something stupid and piss it away. And you have a lot of people, well, most people will do that, but you have a lot of people will learn a valuable lesson from it. Some may do really well, and they may discover a new path. But I don't know. You reckon that'd be cheaper than educating people at school? One person, James, a young financial consultant who lives in Sydney, lost $10,000 last year as a result of a risky investment on the share market, which ultimately didn't pay off. Yeah, it's 10 grand. Okay, it's not the end of the world. He can just use that loss against something else, can't he? According to Mr. Lincoln, big companies are also not immune from the woes of the stock market, particularly in light of the high inflationary environment with high interest rates. This really feels like an advertisement, doesn't it? But see here, guys, it's fear. Fear, collapse, warning issued, 75%. These are the things that, well, prompted Rachel to send me this article and prompted me to look into it. It is fear. It's how people are manipulated all the time. You can see it in the US politics right now, the complete shit show it is. And just the whole two-movie or two-world or two-reality hypothesis now that Scott Adams has put forward. You look at how CNN will report something. You look at how other media outlets will report something. I think one thing that's really good is on Twitter or X, where you can get community posts where people will correct, or they'll add additional context to a news article. One thing I found really funny is people are adding community posts to drop shipping adverts, where you can see you can get the same thing for 50 cents at Alibaba or AliExpress rather than $20 that they're advertising for. Anyway, in the listed space, we've had 19 corporate failures, he's explained. It's a big increase compared to 8 failures in 22. It's probably off the back of COVID-19, when a lot of them were zombie companies that weren't able to fail because of government stimulus packages and allowing businesses to trade while insolvent. But that still isn't, 19 doesn't seem like a lot. While all those corporate collapses, more are also expected to come. Now in a high interest rate environment, we expect that trend to continue. He named and shamed several surprise companies as teetering on the brink on their latest financial results. These include let's have a look. Financial services software company Iris, IRE. Okay, have you heard of them? Global packaging firm Amcor. Okay, I know them. Superannuation provider Link Administration. Star Entertainment Group, SGR, and retailer City Chicks Collective. Other large companies that have been placed on the unhealthy, listed as unhealthy, include Block, previously known as Afterpay, petrol retailer Ampol, AGL Energy. Oh, I have shares in AGL. I think I'm up 60% in them. And property firm Domain Holdings Limited. Yeah, I mean, people have been saying this all the time about Domain, haven't they? We also need to be careful of investing in companies with alluring themes such as AI, Mr. Lincoln added. Yeah, that's what frustrates me with AI is sometimes when I'm searching on Bing, I just want to be sent to the 5-year-old forum post that the AI is using to write a bunch of crap. I want to go to that original source just so I can read it. Most AI stocks in the Australian share market are financially unhealthy, such as BrainChip or Nuix. The mention of Nuix comes as the firm is being raked over the coals in a parliamentary inquiry as senators called for the corporate regulator ASIC to pursue the company in a court of law. Well, there we go. So let's have a bit of a chat about this one, guys. So, yeah, I mean, fear used to get views, get clicks, manipulate you, and obviously to sell the services of this business. I'm assuming this is done for marketing reasons. There's nothing new about this. We should all be aware about it. This is something we need to educate our children about, honestly. How fear is used to manipulate people, particularly in the media, particularly in social media. But then again, how many people out there don't realize they're being manipulated? As always, thanks for watching. Like, share, subscribe, do all those YouTube-y type of things. And check out Heiser Bim or Heiser Does, and I promise I will update it shortly. I'm just flat out at the moment, guys. It's a bit crazy. If you want to support us, you can on YouTube or Patreon. Use our referral links via Pocket Squares, or call me if you need an architect. Take care. Have a great day. I'll see you tomorrow. Bye for now.